Now, I want to get right into it. I want to talk about interest rates. Obviously, interest rates are dominating the headlines right now with this 0.25% increase. We have another Friday pod that we do every week, and our partner in that has been telling us that interest rates are going to increase. I've been saying no, they're not. They're going to stay stabilize, or they're going to come down. And here we are with a 0.25 raise. How do you see that affecting the market, if any effect?
Okay, well, interest rates just change behavior. And it dampens down demand, but it doesn't stop demand, and it doesn't change it anywhere near as much as many of the talking heads say. It might drop demand, say a 0.5% rise, which I think there's another 0.25% coming. Whether or not it's May, August, I suspect it'll be after the proper quarterly figure comes out next, which will be then a May change, and I suspect it'll go up again. So let's call it a 0.5% rise for the current tightening cycle. That would reduce demand for property about 8, maybe 10%. That's generic across Australia. Of course, its impact on, say, the Gold Coast or on Albany, Wodonga, or in definitely places like Perth would be less than that, because there's momentum in local markets and supply type. There's a whole range of things we'll get into that affect the real markets in Australia, not just the overall market. Um, so, but that will reduce the demand, but that will not stop price growth, I don't believe. It will not necessarily stop markets in its tracks, although I read that a downturn is coming. When that's no market really is in a position of in the downturn phase of a cycle at the moment. It might slow those cycles down. It may see less price growth than would have happened without it, and that's the aim of rising interest rates, is to reduce inflation. And price growth of housing is really an inflationary thing in terms of it's going up in value, so that causes some inflation. Um, I'm surprised that the Reserve Bank actually dropped interest rates last year, particularly in the early part of the year, because inflation hadn't hit that 2 to 3% band. They did it as a preemptive thing. I actually think that you know, it's not a Chinese war between the Reserve Bank and the Treasury, but it's not as thick as it once was. So they're hearing each other, and I suspect there's a little bit of that going on. Um, but interest rates, yeah, they have increased a little bit. Looking forward, I don't see them falling much. I think they will probably settle where they roughly are for the foreseeable time, because increasingly, as governments spend money and so forth, and inheritance passes or skips generations and often goes to housing and a range of those other things that happen in an aging society, um, that you'll actually see that interest rates don't have that real impact of dampening demand, particularly if they're on the fiscal side, being government spending and the amount of money that's loose um, um, in the economy, because of just even the stuff that we've done washing through, even through COVID. Initially at COVID, nobody knew what was going to happen. We felt very comfortable that we just moved down to this place, Tassie, and we were like miles away. Um, and it was saying, well, we weren't shut down or any of those type of things. So impact here was not much. But when you looked at Australia and the world, we didn't really know, are we all going to be quite sick? A lot more of us going to die. So the amount of largesse in the economy, in the market, the government, um, bond buying and inflating markets and so forth was probably justified. But 3 months into it, maybe not so. But we continue doing it. So the market and the economy is awash with funds. That's far more than what normally would happen. And unless you pull that back, then interest rates, I think you can increase them many times, and it wouldn't necessarily stop the housing market. It'll slow it down a little bit, but not stop it.
It seems to me, sorry, it seems to me, Michael, it's a bit of a blunt tool, because you've got a good portion of the market that their houses are unencumbered to start with, and then you've got another huge portion where the debt levels are actually pretty low. And then you've got the people that probably aren't spending the money, that have just bought the house, that are in the debt up to the eyeballs. They're probably not spending as much as, say, the boomers are anyhow. So do you see it as a blunt tool? Obviously, if it goes really, really high, it's gonna have an effect. But, obviously you said, there's a lot of other spending going on that, I just don't know if it's gonna quite have the desired effect that they want it to have.
Oh, no, I actually agree with you. It's a couple of things. I think the Reserve Bank, it truly should meet twice, 4 times a year and make a decision, 4 times a year about the next 6 to 12 months where interest rates are going to be, set them and go away, because there's so much conversation every time they meet. It fills the newspaper. There's podcasts about it. All you read is in the newspaper is about this, that, and the other. Um, but people, unlike ourselves who do this, spend time talking about this, mums and dads, and just, they got to have lives and everything else. Um, they, they don't know what to believe. I think there can be a lot more tightening of changes, by tweaking, things like APRA control. So, okay, we want to increase a lot more investment housing. So let's change the buffer, or the amount of ease of which that we can lend more money to housing investors to buy new property, or moreover to do their own developments to provide more property. Let's loosen that and then tighten things against, you know, mum and dad who are, I'm not saying they're in their 60s like myself, da 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 da, but they're buying an established house, and they're not adding to the supply. There's a range of smaller things that we could do under the guidance, or I read something about this a couple of months ago. The RBA should be actually influencing and pushing, um, the likes of APRA to actually change some of the screws, so to speak, in terms of tightening lending here, loosening it there, even on a regional basis. If you're saying that, this market, call it Perth, is undersupplied, we can't keep up with the demand. The demand's going to be out there because the economy's doing ABC. Put aside the GST transfers, and that's a bit messy, but because that's some of the growth reasons. But if that stays the same, then they should be able to do that. Just like, they FIRB used to have, you could buy 100% of property could sell overseas, then it dropped it back to 50%. I think it's back to 100 now. I could argue they should have changed that by location. If we need more investment in the Wollongongs of the world, and we need X number of these projects to start, and part of that will be somebody from overseas, call it China, buying off-plan apartments, then let's let that at 100%. But we don't want that in Sydney, so let's keep that at 25%. Things like that. I think there needs to be a lot more. Um, um, what I'm thinking missing. This, I'm getting old. I can't think of the word. Salt and pepper, or shade and light, that needs to be happening across those tools, rather than just saying interest rates have gone up, sucko, everybody has to put up with a 25% rise. Every bank will increase in that, because the banks are, a bit sad in Australia when I think 5 of the biggest out of the 12 businesses are banks, and they all make a great profit. Um, and so forth. So they're all going to pass it on.
So,
And so what?
so that's the interest rate perspective. On that supply and demand side, what are you seeing there, that's not in the mainstream media, or a political, advantage for one of the other party?
Okay, so well, there's two issues with this. Housing's all about supply and demand. So and it's quite a simple thing. Um, and when you look at supply, there's two things that need to be measured. One of them's measured. Well, they're both measured, I think, quite poorly, in that one of them is not consistently done the same way, and one's not measured really at all. The first is the existing supply of resale stock. So most people buy a resale of something, and the measure of what's available for sale in an area, you can painstakingly go through a couple of, portals, Domain, realestate.com, one or two smaller other ones, and you can nut out how much is for sale in a Brisbane or a Sydney or a Melbourne, or a postcode within that, or whatever. And then you can look at that versus demand, how many sales take place. If it's under 6 months supply, or so all of it would sell within a 6-month period. That starts to get tight. Many of those markets are under 3 months supply. So things are selling quite quickly. It's very simple. You're looking for a house, you see it come up for sale, you go and visit it, and 5 houses in the street in a 2 months period since the last time you had a look in that area have all got sold signs on them. That to me would be market would go, oh, geez, I better do something. I better make an offer. I better turn up to that auction, blah, blah, blah. So that's important, and it influences a lot of transaction, and it's largely responsible for the general price inflation of houses. The resale stock going up, put aside the renovations that happen inside the building. If we were to say that house resold with no major changes from this year to next year, part of that increase is to do with the demand versus that resale supply. The second is the supply of new stock. And there's a couple of things that we have to provide a lot more housing than the talking heads say, and even the government says, because it's not just based on household size, because just say on average there's 2.6 people per home in Australia, which is right. You have to take out that about 10% is unoccupied. Now a lot of that, 70% of that's in apartments, and 30% is in detached stock or that type of stock. So some of it's just locked up because with capital gains, I will just I'll reap the capital gains. I'm not interested in putting up with a tenant. I've got damage. I've got to manage it. Blah blah blah. Secondly, and that there was a big change in particular with investors over after COVID, is that a lot of that stock was locked up. It didn't necessarily go to Airbnbs. A lot of people think that's the case. It got locked up, and it stays locked up because people say, well, we could use it in the future. We're making great gains. We have made great gains, particularly since COVID. Talk about price growth probably soon slowing down a bit. So that's happened. The other thing as well is that they don't factor in that about 30% across Australia of people are children. And most kids, sadly a few don't, but most kids live with their parents or with guardian or somebody. So they need to be removed out of supply. So instead of saying 2.6 people per dwelling, there is actually about 1.8 because the kids live with their parents. So we have to already build something like 20% more than they're saying. Then there's a factor that whilst marriage rates are dropping and divorce rates are dropping, well, they're kind of like touched into each other, but relationships fracture a lot more, and there's an increasing number of people who actually live alone. And as a result, you need 2 dwellings instead of maybe a couple needing 1. So those trends would suggest to me, and the work that I've done, particularly when I do consulting work and really get into like the nitty gritty of will this project work and what is the underlying demand and so forth. There's a need to build a lot more, and we can't do that in Australia, even if migration dropped substantially, because there's household formation and changes within the current existing residents as there is. We have to change the way we deliver things. And I think it's quite interesting that if you poll, and I've done this many times and only recently in the lights of my Substack thing, but also in LinkedIn and so forth, if I ask the housing industry, what is the major issues you facing? One of them will say, oh, we can't get anything approved. It takes too long. And I understand that. Look, I am a town planner by trade, by qualification. Don't throw anything at me. So I can get away with saying some of these things. But something like 70% of the apartments approved across Australia don't get built. They get approved. So one has to ask you, well, why is that? Is it too hard to provide? It's not the stock that the market wants. It doesn't make enough profit. There isn't, you could argue there's not enough detached homes, but there's where do you put them? How much do they cost? The land components, X, Y, Z going up. One thing that's missing is the missing middle, particularly infill housing, small lot housing, the type of things that people under your program are providing, and more of it needs to be provided. That is one thing that can be supplied relatively quickly if the mindset changes of approving authorities, but more importantly, the NIMBYism actually changes. And if a market slows down, not stops, market slows down, one of the only ways that mum and dad are going to get the return on a housing investment, particularly if they've lived in an area for a while, is to improve that property. And that increasingly means backyard home, maybe subdivision on the side, maybe fixing the house so the tenant can be under the house rather than the car that, they've got two and they only ever use one, those type of things.